We're getting on for a decade beyond the global financial crisis of 2008, and yet we're still very much affected by what happened in those years, and in particular the austerity measures and the knock-on effect of that. I think we're seeing in politics today. So a lot of people felt very disaffected and detached from the economy by those kind of events. And we've certainly seen an increase in inequality over the years. I've heard comments around Brexit where, for example, it's fairly widely held by economists that Brexit is going to be depressing for the economy, certainly in the medium to long run. But a lot of people in the electorate are saying, well, that's your GDP, that's not my GDP. They feel very much isolated from that. And a lot of that is to do with the way that wages have been very depressed recently. If you look at data, it shows that the share of GDP going to labour has fallen by about 5 percentage points since 1990 to levels that we haven't seen since before the Second World War. So the austerity measures are certainly not helping, and in a more pure economic sense, if you take a Keynesian view of economics, they may actually be depressing demand and making it very much harder to return to growth. The paradox about austerity has really two angles to it. The first is a fiscal angle. So austerity measures are about trying to cut government spending, cut government debt. And those measures have been impacting heavily on people on lower incomes, particularly through the freeze in benefits for working age people, and cutbacks too as we move to the less generous systems like universal credit. So that has an immediate depressing effect on the economy, thinking about the economics in a very traditional Keynesian way. But what we've also seen since the global financial crisis is the use of monetary policy. So we've had very low interest rates, and we've also had the buying up of assets in order to further depress interest rates. That has made a lot of investors look for other areas that they can invest in. In fact, that's precisely what the policy is meant to do. But some of those areas have been areas like housing, and that's been driving the growth in house prices, pushing home buying out of the reach, particularly of younger people.